Phil, welcome to the show today.
Hey, Michael, great to be here. I'm excited for our discussion today.
Yes, so am I, because you've done so many cool things in real estate, and I'd love to compare some of the strategies, because a lot of people are always kind of think, well, what should I do this? Should I flip this? Should I buy this? Should I do this? And you've done a bunch of them, so I think out of anybody, you would be very authoritative to be able to compare and contrast, and so I'm looking forward to that. Before we get into that, how did you kind of get started in real estate? What was going on in your life?
Yeah, firstly, and Michael, thanks so much for letting me having me on the show. I'm super excited to share my story and hopefully shed some light on some of those things you talked about. I grew up in a very small town entrepreneurial family, large family, but entrepreneurship was always in my blood. And got married to my wife Marcia, so we've been married for I guess almost 17 years now. In 2008. In 2011, I really started thinking about real estate because that's when we had our first child. So we have five kids, and first, I think real estate. One thing that's important is why are you doing real estate? Why do you want to do it? What's the driver behind it? And our first purpose behind real estate was we had our first child. My wife Marcia was working full time, but a lot of nights and then Saturday mornings as a hairstylist. So our first purpose was how do we get her out of her job, or at least start to work less. So I'm also, I should say, an engineer by trade. Started out in engineering in '05, so very analytical, procrastinated a lot, had to really think about and study things. Went into the corporate management role, and over time that changed into different leadership roles. But I had this itch, and really when we had our first child, it got me to pull the trigger. I said 2011, but I didn't pull the trigger on our first single family house until 2013. And I thought about it, I analyzed it, I overthought about it, I overanalyzed it, and I finally pulled the trigger. And one thing I'll say about real estate in general is, especially if you're analytical and numbers make sense, I thought they would make sense, but then when I did the first deal, this is single family because I know you're law with the first deal, but when I did my first deal, it all made sense, Michael. The five ways to make money in real estate, it all kind of clicked, and I started to see it in action. And that all of a sudden it took me a couple years to buy the first, but then 4 months later I bought the second, and then 4 months later I bought the third, and then 4 months later I bought the fourth. And I kept going and figuring out different strategies around single family for a period of time. I'm a slow learner, Michael, so it took me a little bit to get to multifamily. We'll talk about that, but that's how I got started.
Yeah, interesting. So what was around when you had your first child that prompted you to start looking at real estate? Why did you mention that together with that other event? Why was that a life event for you with regards to
Yeah,
real estate?
I would say first of all, I think it comes back to I think getting clarity on your why and why you want things is so important, no matter where in your journey is. And for me, not only was it probably going to be harder on me if my wife had to work evenings and weekends, but also just to see her away from our kid was really a driving factor for me. So that was the first thing. And with real estate, we started to say, okay, let's not work Thursday nights anymore. And then we had a couple more. Let's not work Saturday mornings anymore, which was a big move. And then let's take out Tuesday evenings. And we got her to a more normal schedule till eventually then she was the first one to leave her W-2.
So this was a conversation you had with your wife around this whole real estate thing?
Yeah. So then why specific real estate? We had looked at different businesses. We tried some different things, honestly. Like I was, just looking for more, and I just kept reading. You know what? Everyone says like wealthy people invest in real estate. Like that's where it just kept coming back to that. I think it's probably around then I was starting to maybe and listen to Bigger Pockets podcast, and really I think it's important you get clarity on your purpose, but you start educating yourself on that too, and how you might do that or support your purpose, right? Because there's a lot of different ways to make money. I happen to think real estate is the best one. Um, but just through different sources and education, I said, okay, yeah, I think real estate is the way to do it. It's not get rich quick, especially with single family. It takes a little bit of time and to build up that cash flow. But that's what brought me to real estate specifically.
I think I find that having a conversation with your spouse about this is absolutely key, right? Because you're doing this not just for yourself, you're doing this for your family, really, right? So what kind of conversations did you have with your spouse around this? Like how involved was that conversation? It was like, yeah, I'm going to figure this out. I'll let you know when I got something, or did it go a little deeper than that?
I would say I definitely had the mindset to include her, and we were in complete alignment on doing this. We might not have been, Michael, in complete alignment on how this all evolved over time. There's a story behind that, but we definitely had the conversation. She knew I was looking for something. She's been supportive. She's not like, she just kind of trusts me with the numbers, with business, things like that. So she's super supportive. She ended up helping the part that she didn't maybe agree to. She ended up, after we bought three or four, she started helping manage those properties so I could focus on finding deals, connecting, networking. But as she gained some free time from being a hairstylist, she helped manage the properties, and they were pretty hands off. There wasn't that many at that time. So um, that ultimately led to 2017 when we had this kind of pivotal moment where we had, I think, 25 or so single family doors, and she was managing them all. And there was some sort of discussion between us where it went something like, I didn't sign up for this because so we just had to make a decision. Do we pivot and go multifamily? Do we try to do like 60, 70, 80 single family? How long would that take? Where would we have to get to? So that that's kind of how that all went. But in general, we have a very open dialogue about this stuff. She's been very involved, trusting but involved, if that makes sense.
Yeah, I'm not saying that the spouse has to be in the business like your wife was, but I think having that conversation, right? Because typically it's the primary breadwinner that's doing the suck. And so in our country, 80% of the primary breadwinners are men. And so a
Yep.
lot of people that come to us are happen to be men. So normally they're trying to do something. They're trying to figure out how do they make money but still control their time. Like
Yeah.
that is the number one thing. And so many times that's the conversation, and having a conversation with your spouse about being on the same page, I think strengthens that why.
Yeah.
And
And I would just say that this conversation with my wife has evolved over time to where now we're much more disciplined about getting alignment on our goals in all areas of life, what we want to do, what we want to accomplish, how we want to raise our kids, what are our core values. We're doing that in a much more, I would say, structured, and it's not over the top, but every single year we try to get away a little bit and have like a day or two where we just really get into our goals and what we want to do. So we're on the same page. And honestly, if we want to try something different or something new, we're both on the like, hey, she's gonna go coach volleyball. That's gonna take a lot of time away from home. Or am I in alignment with what she's wanting to do, and vice versa? So I think those discussions in general and being aligned are really really important.
now, you said earlier that it took you a couple years to take action. Let's talk about that because you said you're kind of an engineer type,
Yeah.
analytical type. What caused that 2 year delay, and how did you finally overcome? Why didn't it turn into 5 years or 10 years? But on the other hand, why didn't you just jump right in? Like what? Talk about that. How did you overcome that?
Yeah, there's definitely different personalities. I hear people say whatever, like ready, aim, fire, and then some people are fire, fire, whatever, fire then aim, whatever
Opposite.
it is,
Yeah,
but
yeah.
the opposite. And I'm definitely the ready, aim, aim, fire guy. And I looked at the numbers. I mean, I remember having a conversation with someone, and they said, "Look, Phil, you got to when you're looking at different deals and risks. This is someone that had 5 or 10 single family houses. What is the best thing that can happen, and what is the worst thing that can happen? And so often, what do we focus on? The worst thing that can happen, and we get caught up in it. And I got caught up in it, and really my message there is the worst thing that could have happened to me is maybe the market could have crashed. Maybe there could have been an issue at the house where I didn't have the right insurance or whatever. Like, but maybe it cost me $10,000, maybe 20 even. I could have lost money, and it wasn't that big of an investment. What I thought was the best thing that could happen was I would cash flow like $250 a month. Maybe I'd gain five or $10,000 in equity. But the best thing that can happen oftentimes to us is not the financial result, but what we learn from that process that accelerates us in the future, right? Whether that's, with real estate or in other areas of life. And the best thing that did happen was, look, we've made a ton of progress. I didn't really picture where I am now at that time, but I gained the confidence, the understanding, the knowledge, the experience to go by the second one, the third one, and it just kept propelling me forward. So when we're thinking about making the first move, I'm not saying be silly or silly about it. And we can talk about risk because I think risk is really important to understand. But make sure you understand the real upside to these opportunities, too, not just the downside in dollars and not just the upside in dollars, but the real upside and what this could be long term. And I think people have to ask themselves, what will I wish I had done today, 10 years from now? And I encourage you to fear regret, not failure. That doesn't mean be stupid about it, but don't look back and say, oh, I wish I would have done this or I wish I would have done that. That's what gets to my core and helps me get over the hump, along with education, associating with others that give me the courage to act.
Well, here's the thing. I mean, I think us analytical types, and I count myself to those kind of people as well, we really like to remove uncertainty. We don't really like uncertainty. we were taught from our jobs that everything's planned out. That's we won't really embark on a plan unless everything's worked out. The problem is with entrepreneurship, while you should do some planning, it's impossible to plan everything out. It's like, like
Yeah.
Mike Tyson says, everyone's got a plan until you get punched in the face.
Right.
So you can create a plan, but already understand that as soon as you get going, the plan's going to be out the window. And a lot of people can't deal with that.
Yeah. Well, I think the other thing about that is we plan so much, but remember that after things happen, we have time to solve them. We don't have to solve them before they happen. Like when I left my W-2, man, talk about planning and spreadsheets and ridiculousness. But I tried to anticipate every single problem that might ever happen. Maybe 2% of them happened. And when they happened, I had all this time on my hands to go solve those problems. I didn't have to solve all of them before they happened, right? There's a Mark Twain quote that says, I've had a great many fears in my life, very few of which actually happened. So I butchered it, but you get the point. Like we create so many problems in our head that aren't real.
Absolutely right. So, like a lot of us, we start getting started with single family houses. Now, to what degree did you know about other strategies or care about them? In other words, was it very obvious to you that you needed to buy a rental property, or did you consider some other strategy, or did you know about other strategies?
I was familiar with other strategies. I probably, honestly, I haven't talked about this, but I'm guessing in 2015, I probably started thinking about multifamily, just from probably different podcasts and whatnot. But it wasn't until 2017 that we said, "Hey, we're going to do this. Let's really start looking for deals, being more intentional, going to, apartment association meetings or just networking with others and trying to find deals." So, um, I had thought about flipping, but I think there's this spectrum of active to passive, right? I think single family houses and rentals are on that spectrum somewhere. I think flipping houses is more active than single family rentals. And I think multifamily, especially relative to scale, is more passive than single family. And then in real estate in general, I think is more passive than a lot of other businesses that you could operate and run.
In general, yeah, I agree. This is funny because I came to the conclusion that flipping was a way for me to go. And you decided rentals was to go, and I don't know why. It could be that flipping I felt was more profitable, maybe up front, because you can make $30,000, $50,000 per flip with a rental. You're not really making a lot of cash flow. You got to hold it for a bit, and you make money at the end. So to me, it was more profitable to do that. But for some reason, like you said, I just didn't think about the fact that it wasn't really very passive. And
Yeah.
so I struggled with that, and you dismissed flipping for that particular reason.
Yeah.
But why rentals? Okay, it is less passive, obviously, but it in my mind is less lucrative as well. Why was rentals of the single family house strategies? Why was that the go-to for you?
I would say it's a combination of maybe I don't know. I don't know if I was just a brainwashed or whatever on like long-term buy and hold versus flip. And then I also didn't have the resources or infrastructure figured out. So maybe this ties back to my engineering like analytical background where I didn't have that all figured out. But I thought if I bought a house that was pretty much ready to go, it was an easier lift and I could just rent it out. Now, in hindsight, like our third property, we did a pretty significant flip on it, but we still refied it out, did the burst strategy, and held that property. This is still a single family before we switched to multifamily.
So how are you buying these, right? Because the problem with rentals, and same thing flips it. I mean, most people can handle one flip at a time. Now I did 12 a year. Okay, yay me. But most people can handle one flip at a time, 6 months of flip. So you can do two flips a year. You're making like 100 grand, which
Yeah.
is super cool. Question is, how do you go from making 100 grand to a million, which is like wild. Like you can't.
Yep.
And with single family houses, though, I think there's also a limitation to how much you can scale, but maybe I'm wrong with that because you need either your own money, you need to get financing for it. So how were you financing it? Were you saving whatever you could from your job and buying, were you getting HELOCs or how were you financing those rentals?
Yeah, I think there's two factors of scalability here. There's both time and money that we'll talk about
Yeah.
single family versus multifamily. I'll talk about money first since you asked. So our first two deals we bought with 20, 25% down, whatever it was, and that's how we did it. The third deal is when we bought one, we rehabbed it. We were able to refi everything out and the light bulb clicked there saying, okay, we can do this strategy and not bring our capital. So then the next 20, which was over 4 years, was a mix of our own capital and the burst strategy. So I was in the corporate world, kind of, you know, climbing, if you will, the corporate ladder. Made a fair income. Um, used our line of credit for our a home equity line of credit on our primary house for some of these purchases that allowed us to buy, flip it, reposition it, and then refinance it. So it was kind of a mix of the burr with some money down that we were saving. And we live in, small town USA in Ohio where the real estate isn't that expensive and the cost of living isn't that much. So we were able to save to support the down payment when we had to.
Gotcha. But actually, you built a pretty sizable portfolio. I mean, 20 houses in 5 years. That's you're buying 4 or 5 per year. That's not
Yeah.
bad.
Yeah. But that brings us really to the other element of scale is time. So we're doing 4, 5, 6 closings every 2 months. I mean, single family versus multifamily, obviously the due diligence process is different, but there's still a due diligence and closing process for single family. And I didn't know this at the time that it wasn't that dramatically different than multifamily. Um, but we were doing it over and over again. We came to this pivot point where we're like, are we going to really keep doing this? And if we want to get to 50, 60, 70, we're going to have to accelerate how many we do. Acquisitions was pulling a lot of my time, which means I was putting the management all on my wife's plate, honestly. So we're like, well, do we go the multifamily route where we have less overall acquisitions? You have the scalability and the numbers, the number of closings, finding the deals, all that stuff. There's just more like single family is a grind and you really got to hustle. Whereas multifamily, we did it. And our plan at the time was, okay, let's go to bring these multifamily properties to third party management so my wife wouldn't have to help manage those. That was the strategy that brought us to multifamily.
What about risk? Did you consider that? Because I'm sure you personally know people who lost, portfolios in 2008. I mean, I know several of them who spent years building up pretty large portfolios and lost it all. I mean, it's just wild. And
Yeah.
to me, it always sticks in my mind. Now, flipping, I kind of rationalized away, maybe another reason, because I'm holding something for 6 months. So even if the market were to correct, it's not going to correct so badly
Yeah.
in my. So the risk is somewhat mitigated because I only have a 6 month hold. But if I'm doing a multi-year hold, did it ever occur to you that something like that could happen again?
Well, I think first of all, I think defining risk and what leads to risk. Risk, I think, is a lack of knowledge and a lack of control of the situation. And lack of knowledge for me was single family when I hadn't bought any, or multifamily when I like the first one I was going in. The single family experience grew my knowledge for multifamily, even though I didn't know it all. And the second one is control. How much control do I have over the situation? I don't have control over the market and what the market does, but we did have control over how we operated the financing. We got all those different things. So um, I think risk is knowledge and control. And for single family, every single additional layer, really, I didn't see as a challenge. Now, as we got into multifamily, I think there is more perceived risk and more risk on your first deals because your knowledge isn't at the same level as it will be on your second, third, fourth deals. Um, but we even multifamily, like the first deal. So the first deal, we did a 48 unit. We found the deal. Someone else had it off market, but they couldn't get the financing. We helped with the financing, but the three partners on that one all were only single family people. So what do? We brought in a multifamily person, gave them a pretty good deal to reduce our risk of like our knowledge gap because they knew multifamily. They were more local. He got a great deal out of it, and we our perception, I think reality is we reduced our risk by bringing in
Mhm.
someone that did have knowledge.
Yeah, that's smart. Now, we'll get, well, let me talk, I'll talk about it a second before we get there. What made you start pivoting into multifamily? You were talking about you're getting 20 units. It was getting a bit much for your wife. So how did what was that process like?
Yeah, for
You
sure. It
decided,
started with that discussion, and we're like, man, I
why not do it with 5 houses, right? You waited till 20, but not, why didn't you wait another 10?
I
What exactly, what had happened at that
Yeah.
20?
Yeah. I think 25 was enough where it was enough of a burden. 25 different properties. As you hold properties longer, they stabilize more and more. You get rid of deferred maintenance and other stuff, but they were still relatively new properties at that time. And it just became a lot on her and a lot of time. And our purpose my purpose, I talked about like why I was in real estate had transitioned from getting her free from her job to how do I get there for myself because I needed to get out of my job. So we had to get to a big, big number, 65, 70 single family. And I knew she wasn't going to want to do that. She was not excited about that at all. So again, the ability to move management to third party, even the pace of how long it would take to get to 75 doors or whatever it would be. At the current pace, it would take another 15 or 20 years probably. Whereas, okay, with multifamily, 75 doors, or if we had to do 100 or 125, we could do that in a year or two or less even. So I don't know. I think the purpose was growing, and the challenges that we were facing at the time said we got to shift something. And we did have a discussion. Do we just sell all of these and just go back to you know, work the corporate thing? But there was still a burning desire for me that there's more out there. There's something missing here, and I needed to go pursue it.
So a lot of people want to go big, right? But they're held back by a variety of limiting beliefs or false beliefs, even. What were some of yours that you were like, "Well, I'm not sure," or were you pretty much certain you could pull off a 40 plus unit acquisition?
Are you talking specifically about the first multifamily or just in general?
Just in general, right? I mean, in general, you're talking about, hey, I think we need to go multifamily, and then she or you're like, oh, wait a minute, but hold on a sec, how do we do this thing? I don't think that's possible. Did you have any kind of limiting beliefs or anything between your ears where you had to overcome that before you actually moved ahead with it?
Yeah, absolutely. I mean, first, I would say that action creates confidence. So I did have more and more confidence in how real estate worked and how multifamily would work when we were making this transition. But, our ability to select the right property management company. Do I know how to do that? Do I know how to run multifamily? No. So bring it. So I mitigated those risks. But I really, yeah, my mind looking back probably slowed me down in a lot of different ways because of the lack of knowledge, lack of confidence in what we were doing specifically, trying to solve problems that didn't yet exist as I talked about. So for sure there were a lot of limiting beliefs that I was putting on ourselves that held us back. At the end of the day, I learned so much through those and I still have those today. We all do. Um, but I have a different, I think, perspective and relationship with those where it's like if I have limiting beliefs, I'm more prone now to really understand and pursue those and I'll say conquer those than I was at the time. I didn't even know what the word limiting beliefs at the time probably meant. So there were plenty of them for sure.
So right now, right now, you know you have limiting beliefs and trying to articulate those so that you can address them head on. Is that how you're dealing with limiting beliefs today?
Yeah, I mean I think if I'm thinking about something enough, that means it's on my mind a lot. And I'm trying to make sure I understand is it aligned with my values and my purpose and whatnot. But um, if it's on my mind a lot, I need to move in that direction. And the big thing I think about now is I don't have to have my biggest purpose all solved in every single step and every single thing. I just know I need to I think I know what it is, but I do know I'm going to move in that direction because I'll get clarity. There's fog, and as I walk through the fog, I'll get more and more clarity as to the direction I need to go next.
All right. Do you have any kind of limiting belief that you're kind of struggling with right now?
Um, I would say the biggest thing is similarly like real estate. So real estate has given us a platform and an audience to hopefully influence and have an impact, not just in help them with real estate, but in other ways. But my limiting belief is probably, have I earned the right to have that platform? What will people think of me? So is that my ego getting in the way of what will they think of me? And am I being humble, honestly? So I would say I worry about what other people might think of me. But if I really go back to my core and as a man of faith, my identity is tied to that less than it is to what other people think of me. So that's how I get through that. But I know I just need to keep moving in that direction and testing myself because that's also what leads to growth for me.
That's exactly right. Yeah. Yeah. So back to that first deal. You must have raised some kind of money. How did you guys come up with the equity? And you mentioned you had two or three other partners. You brought in someone more experienced. How did you overcome? Because I hear a lot of people, I'm like, I'm going to need a lot of money. I don't have all that money, and I've never raised money before. I don't want to beg my friends and family for money. How did you overcome the capital part of this?
Yeah, so we didn't raise capital on that deal, and we didn't raise capital, I think, for probably our first 7 or 8 years. In hindsight, that probably maybe slowed us down. But the first deal, I mean, it was Michael, it was 48 units. It wasn't a great town. There was probably mistakes. We bought it was in contract for $680,000. I don't even know what that is, 16 a door. We put
Wow.
120K into it, but we were able to bring the down payment with very the bank only required us to bring 25% down, funded the whole capital plan. So we bought that and sold it 13 months later in 1031. We did a tick, separated out in 1031 into a 72 unit, just my business partner and I. And then off to the side, my one business partner and I also bought a 16 unit, a smaller one that we had to bring 45, I want to say 45K down, or maybe 90K total, 45 a piece. And we were able to fund that. We did do some, we were starting to sell some single family. Our strategy after the first one was clear because the light bulb of, oh, this is how value add works, which is a major, major, major game changer for multifamily. I would say the single biggest thing that resonated or clicked with us. So because of that, we started to sell some single family homes that we had and
Mhm.
1031 into the multifamily or cash out and do cost segs, different tax strategies to convert our single families to multifamily.
Yeah, that's interesting. A light bulb went off. So at one point, did you start raising money then? What was happening when you're like, all right, let's get into this thing?
Yeah. I mean, really in 2021, I left my W-2. 2022, I was really trying to figure out, okay, what direction, what do I want to do? I started investing in some passive deals at that time. Talk about a good time to invest in passive deals, right, Michael? 2022, 2023. Overall, they're
Oh,
going pretty good. We stuck to fixed debt and, we have plenty of non-distributions and some other stuff, but we learned a lot through that process. After I did that, I was like, man, I can do this. We can have control. We have the knowledge. I can give investors really good returns that don't even have exposure to this in our area. So that's when I said, okay, I want to do this. So our first deal that we did with private capital wasn't until early in 2024, actually. So we had done real estate meetings, just trying to do the right things. We were able to raise the capital relatively easy in hindsight. So but it wasn't until 2024, 7 years in. I told you, Michael, I am a
God, you
slow,
are a slow learner,
slow
Phil. Gee,
learner.
oh
7 years
God.
in, we started doing that.
It's you get there eventually. But now looking back on your career, when you say you're a slow learner, we said tongue in cheek a little bit, but if you could speak to your younger self, what would you tell yourself? Like when would you speak to yourself and what would you say?
Yeah, I think people, first of all, I'll say this to before I get into that answer is people say like, well, what do you regret? I think things happen for a reason. I don't regret it. There's probably lessons I need to learn that if I did it faster in a different way, maybe I wouldn't have learned those lessons or it could have been a disaster. Who knows what, right? So I don't really, I mean, I don't regret things necessarily, especially from a business perspective, but I'll say that each time, like 2011, like, hey, just go buy one. The risk of a single family, what's going to happen? You have a good job, like you'll be fine. Like go a little bit faster. And again, I don't regret it, but if I would have pulled everything ahead 2 years, that's my financial path would have been 2 years ahead. That could have a big impact. It is what it is, no big deal. I would have started multifamily faster. I think I think single family doing one, I don't know if this is against the rules for this podcast, Michael, but doing one or doing a duplex first isn't a horrible thing. You can learn from that. Just don't stay there very long, right? If you do one, go to a 4 unit and go to an 8. And I don't think, I mean, if you to go to a 100 unit with private capital without the right support staff, network, association, coaching, I think would be a very risky move. Now, if you do that and you have the right team around you to support you, that's a different story. But if you're on your own doing it, a single to a 4 unit to a 16, maybe to a 48 and then you can get to the hundreds. But I would have went to that faster. Hindsight's 2020, but multifamily just brings a whole nother level of value add, scalability, time versus money benefits that I didn't recognize until, well into it.
Yeah, you and me both. What about raising capital? Would you have raised capital sooner?
Yeah, that's a good question. I think I would have. I mean, what's nice is those properties we bought from 17 to 21. I mean, I own 50% of those. So that certainly is nice. But I'll also say that, yeah, I think, 2019, 2020 for sure, there could have been an opportunity to really raise capital. But in hindsight, it's hard for me to go back then. And I think I would have structured those deals where they would have been conservative and safe, especially for what we bought. So yeah, I don't regret it, and I'm in a financial position now that I'm very, very grateful and appreciative and thankful for. Um, but I definitely could have accelerated things by raising capital. Yes.
Yeah, these are all lessons that we learn. I agree. I don't regret anything, perhaps, but simply, one of the things I did not do well that didn't really surround myself with experienced people. You
Yeah,
know,
I would say that.
engineer. I'm so smart, Phil. I can figure things out on my own. I really don't need someone to help me with
Yeah.
this thing. Man, gosh, I lost so much time and so much money trying to do that thing. It's wild.
Yeah, look, I'm working on an acronym and then like a matrix and writing a book and stuff, but there's I think there's 5 steps for everybody for success. And you hit on a lot of them, but you got to get clear on what you want, your purpose, okay? So I'm going to give you the acronym. It's going to be PEACE, okay? Purpose, educate yourself, association. And Michael, to your point on association, I missed it. I wasn't focused on that. I wasn't reaching out. I wasn't getting coaching. I wasn't getting mentorship. So all those things, purpose, education, association, lead to action, lead to courage, right? So the C is courage. And when you started to have courage and take action, that's when you can be an example to others and lead others and help others out. So the acronym is PEACE, purpose, education, association, courage, and example. And if you do those things, from a financial perspective in an area of life, I think you can have peace. Now, I'm not saying you have peace in your whole life. That's a bigger discussion. You have to have alignment of all your priorities. Probably spirituality has to be first. So there's some other things overall, but those 5 things I think are key principles for success that anyone should focus on. And if they do those, including the association, it'll give you the courage to act, and you'll accelerate. You'll accelerate your real estate or financial or business timeline, whatever that is.
Yeah, I love that, man. That's a great book because I agree. You can do anything in life if you follow those principles. You got to be clear, you got to have a purpose, and you got to educate yourself, build a team around you, take action that gives you confidence, and then you can be an example. I
I
love it.
pre- I love it. I appreciate that. Thank you. Thank you.
All right, so parting advice to someone who has maybe done some single family house investing and they're thinking about transitioning to multifamily, or maybe even the kind of person who's maybe learning from this podcast and they're like, yeah, you know what? Maybe I'll skip the whole single family house investing thing. Like, what's your advice on getting into the business? It could be peace. How should someone break into the business?
Yeah, I would say, and I'll say this from the context of like, maybe procrastinating or worried about taking the action is if you're clear on what you want, you're educating yourself, you're associating and networking with others, take the action, like really have the courage to take the action, go do it. And like, don't go into it with what might happen to me only from a negative perspective. Recognize that you can't connect the dots forward, right? So Steve Jobs has a great quote, but you can't connect the dots forward. We can all look back, we can all tell our story, and we can connect the dots backwards. But that next step isn't the final step. So move in that direction, and there's going to be zigs and zags and misdirections and all kinds of things that get you to where you want to go. And that might be the next step is a failure, but you're going to learn so much from that that will propel you to a different direction or the right next step after that. So I would just say, really, I'm talking to my younger self here because of the engineer in me, but have the courage. If you're listening to this podcast, if you're working with Michael in any way, like you know what you need to do. So it's time to go do that, right? And do it smart, do it wise, understand the risk with it, but have the courage to really take action. And you can't connect the dots forward, just move in that direction and trust that it'll work out for you.
Phil, it's amazing. Thanks for bringing it today. How can people connect with you, find out more about what you're doing?
Yeah, I appreciate that, Michael. I'm on social media. LinkedIn is probably the best place to find me. Otherwise, our website, www.moellerre.com. We also have a podcast, the Moeller Real Estate and Business Podcast. Michael was a guest. So if you listen to it, listen to that episode first to hear the truth about Michael. He told us some things on that podcast that you never heard before. We dissected him in many different ways. I'm trying to
Oh,
figure out who you're. I'm just kidding. But those are the
yeah,
places they can go to.
that's awesome. Thanks. Great hanging out with you, Phil.
Michael, we'll talk soon. Great seeing you.